On the economic front, we have some good news. Inflation did not rise, and that matters. The latest CPI report shows prices up 2.7% year over year in December, unchanged from November. Core inflation, that's when you strip out food and energy, that sits at 2.6%, telling us, what that tells us is the pressure under the hood not heating back up. So markets like what they saw, stock markets stay calm, yields steadied, and most importantly, the Federal Reserve didn't get a reason to panic. Dale Smothers, President and CEO of RDS Wealth Management, joins me now. Dale, good to see you.
Good to be with you, Alicia.
So overall, today's inflation report, solid. Before we get to that, President Trump spoke moments ago in Detroit. I want to get your take on that. He said GDP is smashing expectations and declaring, quote, the Trump economic boom has officially begun. What do you think? Do the numbers back that up?
You know, I've said it from the beginning. You're going to want to be a part of this economy, and growth is our path forward to true affordability. It is clear that affordability has become the front and center focus of this administration. And rather than fixing prices or fixing interest rates, I think the best path forward would be to outgrow this what we saw in 2022 with our inflation getting off the charts. Now that we have cooled those engines, like you said, let's grow. And that should be our primary focus. And with that, GDP continuing to increase is a good thing for all Americans.
Yes, growth is always a good sign. Now, some prices, as you know, they're still high, like beef, coffee, electricity. But prices for other items, like eggs, gas, that's a big one. Maybe not here in California, but in many other places, it's down. Airfare and appliances are down as well. So what needs to happen next for better affordability?
You're right. I mean, Kentucky and Tennessee, we're seeing low gas prices, which helps everybody. And it's one of the main reasons that we are not seeing this inflation go off the charts, just like you said. The next step is growth in GDP. I mean, when you think about affordability, it's okay if prices increase, say, 2% a year, as long as our wages are increasing by 3% a year. That hasn't happened in quite some time. Wages have lagged prices, which is why, Alicia, we feel this inflation at its very core. I mean, your dollar stretches much smaller ranges than it did just even 2 or 3 years ago. And 2022 has a lot to do with that. We saw a record number of items reach crazy high inflation. And so, like you said, eggs, for instance, that being lower, gas being lower, these things are starting to at least cool. The next step, Alicia, is growth, and hopefully it's wage growth for many Americans.
That's the hope. Okay, so today's inflation data, do you think it makes interest rate cuts more likely this year, or is the Fed still hesitant?
Yeah, Alicia, this is the best piece of news that we've seen about inflations and rate cut, is the fact that inflation is not crazy. Clearly it's still not at the 2% target for the Fed. I think the new normal is probably that 2.5% to 3% number, at least until we see a new Fed chair take place. I think it makes rate cuts much more likely because we see that at least the Fed can look at this and see that the market's not going to overreact, that prices aren't going to overreact to rate cuts. Rate cuts tend to make things more expensive because easier to get money, right? Money is less expensive to borrow. And that was the biggest fear. Do we raise the potential for inflation just to protect labor? And they're walking this tightrope. We've said it many times on this show, Alicia. You and I have talked about this. This is a tightrope. It's a high wire act. And this news allowed that walk to become just a little bit easier. Maybe think of it now, instead of walking a tightrope, maybe we're walking a plank. It's still one way or the other. Something could move and things could look a little bit worse for the labor market or the inflation of items. But in reality, with this inflation print, I think the Fed has a lot more confidence to go into 2026 lowering interest rates.
That's good. Dale Smothers, President and CEO of RDS Wealth Management. Appreciate your time today, as always.
Always a pleasure.